Welcome to The Explainer. Today, we're diving into something big, Canada's evolving relationship with China. We're going to unpack what this really means for our national security, our economy, and even our sovereignty. So let's get right into it.
Okay, let's just start with this quote. Canada is quietly surrendering strategic assets to Chinese interests. Wow. I mean, that's a really stark warning, right? It sets the stage perfectly, suggesting that there's a pattern of acquisition happening just beneath the surface, away from the official policies. The stakes for Canada's future? They couldn't be higher.
All right, so here's our roadmap for today. We'll start with Canada's official policy shift. Then we'll dig into the hidden costs. After that, we're heading north to the Arctic frontier. We'll look at the powerful connections that might be influencing policy, and then we'll finish up with the view from Washington.
First up, let's look at the official policy that's driving this whole new era of engagement with Beijing. And let me tell you, it represents a remarkable change in both tone and direction.
And what a change it is. I mean, look at this. On the campaign trail, Prime Minister Carney called China the biggest security threat to Canada. Super clear, right? But then, once in office, the policy just pivoted dramatically to this formal roadmap that's all about stabilizing and deepening economic ties, from threat to partner in a heartbeat.
So, what's actually in this roadmap? Well, it lays out a bunch of key goals. It's a pretty comprehensive plan to deepen those economic ties, everything from revitalizing joint commissions to literally rolling out the welcome mat for Chinese investment in critical sectors like our energy and agriculture.
Okay, so that's the official story. But now let's explore the hidden costs. This is where we look at how this buildup of economic ties might present some significant and often unseen risks. We're moving from policy to real-world consequences. To really understand the nature of the threat here, we have to define the methods. Security analysts often talk about gray zone tactics. Now, this isn't about military confrontation. It's much more subtle. Think of it as a slow, steady, and quiet advance using economic and infrastructural means to gain strategic ground without ever firing a shot. And one of the key tools for that quiet advance is something called a bare trust. This is a legal structure that makes it incredibly difficult to track who truly owns property in Canada. Why? Because the person whose name is on the deed is often just a placeholder, a nominee, for a hidden owner. It's like a mask for ownership.
And these tactics, they aren't just theoretical. They are manifesting in a very clear pattern. We're seeing it in PEI, with about 17,000 acres of farmland bought up by a group with links to the CCP. We see it in the mining sector, with stakes in dozens of companies and, in some cases, direct control over mines that produce absolutely critical minerals.
Now, all these concerns converge in one of Canada's most strategically sensitive regions, the Arctic. And believe it or not, the story here centers on a single, pivotal infrastructure project.
From the corporate point of view, the Grays Bay Road and Port Project is sold as the key to unlocking the North's economic potential. The mining company behind it, MMG Limited, even calls it a game changer.
But here is where you really need to connect the dots. The main beneficiary of this Canadian-funded project is MMG Limited. And who is MMG's majority shareholder? China Minmetals, which is a massive Chinese state-owned enterprise. So let that sink in. Canadian tax dollars are potentially helping build critical infrastructure for a company ultimately controlled by Beijing.
And this introduces a pretty chilling security perspective. Naval expert Ted Barnes says we should reframe this project. He argues we should picture it not as a simple supply road, but as a spear shaft. It turns the vast wilderness from a barrier into an open lane, a potential strategic vulnerability pointing right into the heart of the continent.
So, you might be wondering, how did these policy decisions come about? Well, to get the full context, our sources suggest we need to look at the Prime Minister's corporate history right before he stepped into politics. This timeline lays out a very notable sequence of events. It starts with Carney helping to internationalize China's currency. Then he takes a top job at Brookfield Asset Management. Now here's the key part. In November 2024, Brookfield secures a critical loan from the state-owned Bank of China. Just a few months later, he resigns to enter politics. Then he becomes Prime Minister.
And we are not talking about a small loan here. While Mark Carney was chair of Brookfield, the company secured a loan for $276 million from the state-owned Bank of China. And here's the crucial context. This wasn't just any loan. According to reports, it was a critical financial lifeline. It came when China's real estate market was in a severe slump, with vacancy rates at a 20-year high.
So this financing from a state bank was absolutely vital for the company's assets during a period of intense economic stress.
Of course, Canada's policy pivot doesn't exist in a vacuum. It's creating significant friction with our most important ally, the United States, which, by the way, is moving in the exact opposite direction.
And this slide really highlights two deeply conflicting worldviews. On the one hand, Ottawa sees its China strategy as smart diversification. But on the other hand, Washington is getting more and more concerned that Canada is becoming a back door that undermines North American economic security.
And the U.S. isn't just concerned, it's actively building a rival economic bloc. As Vice President Vance said, the goal is to use tariffs and alliances to create a secure supply chain explicitly to counter China's market tactics. It's clear they're on a collision course with Canada's policy.
This strategic divergence could lead to some serious repercussions for Canada. The upcoming trade agreement review could see demands for tighter rules. We could see the return of those painful tariffs on our auto, steel, and aluminum sectors. And you can bet that even NORAD modernization could become a bargaining chip in all of this. So at the end of the day, this is the fundamental challenge. It's a delicate, high-stakes balancing act for Canadian policymakers. It's a choice between the economic benefits of engaging with China and the security imperatives of our alliance with the United States.
And so we'll leave you with this final question. Can Canada actually balance its economic ambitions with its oldest alliance and its own national security? Because the answer, whatever it turns out to be, is going to fundamentally shape this country's strategic future for decades to come.